The world has changed. Future without boundaries is just around the corner. The way we live today can become obsolete tomorrow. A whole new dimension driven by the evolution of AI and virtual reality. Are you ready for the inevitable?
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together there is no stopping us.
Good afternoon, everyone. BC Richfield coming to you live from Suffolk on a lovely sunny day here on the east coast of England. Taking a short break with some family for around about another 10 days, but we'll still be on the charts and still be coming live for you guys. So I hope you're all doing really well. A big shout out to everybody that's made it on live today. See a lot of familiar faces. And also it's been really great to welcome a lot of new people, especially over the last kind of few weeks and months, especially since Christmas. So also I mentioned to everybody that watches this on catch up, appreciate that not everybody can watch this live. So how are we doing, everyone? Everybody feeling good? Everybody got those nice bullish vibes going on? Obviously, today is Wednesday, so it's our altcoin Wednesday typically. So obviously, if you've got any picks, you want anything that you would like to take a look at, please let me know. But something that's been coming up with members recently quite a lot was asking how we can kind of trade within these kind of more uncertain conditions, right? Because there's no doubt that leverage trading at the moment is a little bit treacherous, right, with the ETF news. So myself included, but a lot of other people as well, you know, in my opinion, rightly so, saying that spot is the kind of safe place to have your exposure at the moment. So I basically wanted to say that if you're going to look to day trade these, then there's always opportunities to day trade, right? You have to be careful because you do see a lot of these big kind of leverage sweeps, as we've seen a lot recently. You can see even on the chart at the moment, these big down and upside wicks showing where the market's taking liquidity on both sides. And that's very often to just punish over leveraged people, right, in terms of generating liquidity. So I thought we can make a little bit of time today to look how you can kind of trade the daily liquidity sessions, right? I'll show you how to trade liquidity resting above Asia, which is one of my favorite plays, actually. It was one of the first kind of systems that I really cut my teeth with in traditional markets, was trading Asia's range, okay, sweeping high, sweeping low. So I'm going to show you a few ways that we can do that. You can really build a profitable portfolio, or not portfolio, that's nonsense, but you can build a profitable account trading daily liquidity, and it also gives you really nice clean levels, so there's nothing subjective about it. So I thought I'd put that forward. First of all, let's say a few good mornings. We've got loads of you lovely people in the chat this morning. Erica, very good morning to you, my lovely. You are the first one in today, shortly followed by Gio, Trader Mum Joe. Hey, you guys, how are we doing? Craigie boy's in here as well. Great to see you. Mr. Brownbug, all the way from Hungary. How you doing, my friend? Joshua, welcome. Who else? And Telvin Fu as well. That is awesome. So why don't we maybe, I see a few people have put some bits in the charts as well. Let's maybe take a couple of quick overviews, shall we, on some kind of higher time frame stuff. I know Mr. Brownbug wants to take a look at ETH. Do you mean ETH BTC, mate? Yes. Okay, 0.035. Cool. Well, let's take a little look at ETH BTC, and I can see Erica as well, NXRA. Again, please do bear with me today, guys, because I've just got the laptop rolling out. But we haven't had any technical issues yet. The laptop's holding up well. If there are any problems, please do let me know, and just be aware that it's either Chrome or QBS's fault, all right? Also, Erica, QBS asked me to make a note of when I'm changing through different parts of the stream. So I'm going to try and do that today. But if any of you manage to realize when I'm changing topic and happen to note the time down, please do let me know, because I'm bound to forget. So let me write this note for QBS. Right, awesome. Okay, guys. So, Stephen from Wales, fantastic. My granddad was a very proud Welshman from Aberystwyth. Absolutely love that country. Spend a lot of time in the Brecons and also in North Wales as well, doing the Snowdon range. Really interesting and random bits of information for you is that we actually, I don't think it's a world record because I'm not sure anyone did it before, but we were the first ever people to hike dive gear to the top of the Snowdon mountain range and dive the glacial lake up there. Really fun. No life at all, but we found an old glass Coca-Cola bottle in there from like 1968 or something. So yeah, really little interesting random bit of info for you. So before I ramble on too much, let's take a quick look at ETH BTC. Yeah. Here we go. So as we do with any chart, or I do personally, I like to kind of get a higher time frame view on this. So I'm actually going to zoom this one out to the weekly. We've got a nice lot of information on here. And what I'm looking for here is exactly the same as I look for every week. I'm looking where the key liquidity is resting, right? So in this case, why is there liquidity below here? Well, you've got stop losses, right? So quite often you'll see the market purge an area of liquidity, because the thing to remember is if the stop loss is below here, when they get triggered, they become market sell orders, right? So what you're doing is you're creating this big pool of liquidity at this particular price point that allows any account, but especially large accounts, major players, to come in, institutional buyers and sellers to come in and take the other side of that bet, which means that they can fill really, really large positions without any slippage. All right. Tammy, good morning. Alexander, INJ, SUE, and AVAX. There's some good ones to have in the mix. You know, Injective, SUI as well, which was a QBS pick. Don't tell him because he'll get all cocky about it. But he's been on that for ages, actually, and I think that's a really, really good shout. So let's take a quick look at ETH BTC first, and then let's try and rip through a lot of charts. Yeah, we just try and get through a lot today, and then we're going to find out at the end and do a little daily liquidity trading for any of you that are looking to trade just daily liquidity. And actually, Telvin makes a really good point here. One of the good things about this is that, you know, you're not market condition dependent, right? Actually, one of the things I've not done particularly well over the years is actually maximize, like I'm doing this year, my exposure to altcoins, low caps, getting involved in IDOs, TGEs, etc. I've always day traded, right? That's always been my thing. And ultimately, you miss some of these really, really big opportunities, right? But what you can do is you can be very, very consistent day in and day out. And for me, that's helped me kind of really build consistency in this realm over a number of years. So let's start with this one. We are going to go back over these ones as well. Niz, hello, mate. What an absolute joy. I'm pretty sure this is the legend that I know from Twitter. If any of you don't know him, go and give him a follow. Niz, if it is you, my bro, mate, I'm all over that biltong, all over it. Niz, do the people a favor, will you please, and smash your Twitter in the chat for me. You got to give this guy a follow. Okay, looking at ETH BTC. Now, for those of you that are unfamiliar, my principles on the market are based a lot around ICT teachings from his original mentorship as well as SZ. So I'm kind of looking for support resistance flips of areas, which isn't something common that you'll hear with ICT, but basically it's a similar thing in terms of the rules of mitigation. I'm looking for price to purge liquidity below old lows or above old highs, or I'm looking for it to be rebalancing fair value gaps, right? And let me just give you a very quick example of this so we can quickly fly through the others. So before we got down here to where we are, yeah, to this low, what we'll notice here is when the market purged this liquidity here, right? You see, we came down, we took this low. Price then typically looks to move from external liquidity, which is an old low or an old high, to internal liquidity, which is an inefficiency in the market, like a fair value gap. All right, and we've got a couple of them here, but I'm going to highlight this one because price didn't close above it. So once we've done that, we've kind of taken external liquidity in the form of this low here. Then we've moved to internal liquidity in the form of this fair value gap. Then we fail to come above that. Look at the wicks coming up, showing you the selling pressure is very, very prominent. And then price needs to hunt out liquidity lower in the form of these lows that it's left, ultimately within this one as well, okay? What you'll also notice here is even when these lows here were purged, how price did that and then came back to internal again. Basically, what we're looking at with these fair value gaps is if we expect a reversal here, while we're in a bearish fair value gap, we're looking for short setups, okay? So I just want to make that clear. When we're in a bullish fair value gap, we're looking for longs. When we look to change our bias is, obviously if I draw a much better line than that, is if we get a close above it, right? So if we've got a bullish close above here, then my expectation is that internal liquidity's failed and price is heading for external liquidity, right? So that's just to give a really kind of quick overview on what I'm looking for, because then we can really rip through some charts. So what we've established here is that price has run external liquidity now. So where am I looking for? I'm looking for price to come back to internal liquidity. Now, the most clear and obvious one of these being the one that I just obviously deleted, right? So now my theory is with ETH BTC that price is drawing back towards this. This becomes our draw on liquidity, all right, or DOL. Let me just do that a bit larger for you guys so you can see that. Okay, so with this becoming a draw on liquidity, we've got an idea already on where the market is heading. All right, so now we're saying, okay, well, we've got that principle in place. What can we now do? Well, we can look for other areas of confluence. We can also see we've swept that low here. We've taken a local low here as well. So with that in mind, we now have the theory that price is heading higher. So what do we now want to do? We now want to move to a lower time frame and then frame it a little bit better. Okay. Oh, fantastic. Well done, Niz. Guys, please make sure you give this guy a follow. Really, really, really top account. Superb. Just going to leave that up there for a second. So is everybody following along? If you've got any questions, I know I'm flicking between the chats at the moment. I see you in there as well, Telvin. Will absolutely. Well, no, actually, I'll deal with that question now, mate, because it's a fair question. I have a question. If there's a pump after the approval of the ETF, should we take profit immediately or should we hold? Now, I think this is a really good question for a couple of reasons. So there's an old saying, which is buy the rumor, sell the news. Right? Now, I'm not saying that that's relevant at the moment, but what I typically do in these situations is the ETF news, in my opinion, will only be bullish overall. How can it not be? However, what the markets are designed to do is to horrifically punish people that are over leveraged and overexposed, right? And that's why I've been saying that your spot positions are the safest positions for you to be in at the moment, because you can just hold them. And as price rips lower, you can just buy a little bit more. It's up to you and your strategy, but that's what I've been doing, right? And actually, towards the end, I'll show you with the B Pro how I'm kind of utilizing it to get myself into positions. I built some amazing positions I'm really proud of anyway, because it's not really my strength in INJ, Veracity, AVAX from absolutely ages ago, and just looking at how price moves back to moving averages, how it holds the B Pro trailer, right, when we get the divergences, and then you can overlay that with TA. But for me, I'm not looking to sell any of that for some time, right? My portfolio, I'm building that over time. So what I would say is please, please, please make sure you don't over leverage, because what you will see is these huge horrific wicks when you see news drop like that, and they're designed to wipe out leverage on both sides of the market, reset. Then the market will typically consolidate a little bit and then continue with the momentum that it needs. There's obviously no guarantees, but there's no denying that the market is very, very bullish. All right. So with that in mind, we can see the kind of opposite here with ETH BTC, right? Now, for any of you kind of trendline traders out there as well, you can see, and depending on how you do these, I would actually do it like that, because I want to see these kind of clean touch points here. We can see we had a deviation here, price runs liquidity lower, price deviates here, runs lower, deviates here, runs lower. Now, what I find really interesting as well is if we're looking at it like that, we can see that this kind of area is now coming into play with our draw on liquidity and our fair value gap. So if we did get that situation where we get this close above, we want to see this turn to support. All of a sudden, this is really, really interesting for me, because this is basically just been going down, If this thing wants to rip, I think it can really go. But we don't want to assume, right? What we want to do is put ourselves in a position where we understand the technicals on the chart, and then we can kind of act on it accordingly. So let me lock this. And let's move from a weekly down to our daily, okay? Now, the daily here, we can see we had this beautiful purge lower, right? Price has now made a recovery. Now, remember what I was saying about fair value gaps, right? Now, this one, we've had a really strong close above it here, right? So, well, we haven't yet. We need to get a close above this today. If we close above this today, we inverse this, right? Because that's a bearish fair value gap. When price interacted with this originally, we would have been expecting it to draw price lower, all right? And actually, if we just drop down to say like a 4 hour, right? We can see here as price ran this level, how aggressive this recovery has been, right? That is just absolutely pumping. And you can see that on the charts today as well. So if I'm looking at this in terms of a play, then right now, this big drop down here, I'm just looking for the inefficiencies that exist above it, right? We've taken external liquidity. We should have come to rebalance internal liquidity, but there's something else we can factor in as well here, which is our premium and discount range, right? That means we're favorable buyers down here and typically sellers up here. Now, this isn't so much of a swing or a hodl or an investment strategy, right? This is much more of a day trading technique, but it does show us our positions in terms of risk to reward. All right. So while we're up here, I'm still being a little bit cautious. And where do I think the price can run to, or where would I see price close above to get even more conviction? Would be here. Right. So if we look at this, we can see ultimately this is our draw. Yeah. So this is our target up here. This is where we think price is reaching for. And we can see, to add some confidence in this, we've got a lovely untapped high resting in here as well. Now, if we get, I'm looking at this on a daily scale, obviously, I'd love to see a close above this. Because if we get a close above that, then basically we've got nothing but balance in here, right? All of these candles have overlaid one another, right? Meaning that it's efficient. It's efficient market delivery, meaning that we can really rip through this. So I think we've got some really, really big upside if we close above this level. If I was looking to drop this down onto a lower time frame, and actually I'd probably favor moving down to something like exactly where we are here on the hourly, because the daily to the hourly gives us a really nice shift if we're using a triple screen system. Daily, hourly, 5 minute, really, really good way to kind of get involved. So we're just asking ourselves the same question. Price is delivering from this currently, right? So that's bullish. What would we want to see in here? Well, we'd want to drop down to a 5 minute. I would personally be waiting for my New York trading session, all right, which comes in about just over an hour and maybe sort of 13 minutes at 1:30. I would really like to see, if I'm overlaying my principle of premium and discount, where's our first fair value gap down here in discount? Because we want to be a buyer in discount, a seller in premium. So what I'd love to see here is we work our way towards the New York trading session is something like this. Right? Price coming down, rebalancing this fair value gap that's down in discount. We've got our pre-made target above. We've got our medium, our executional time frame, our framing time frame of the hourly fair value gap here. So we want to overlay the 5 minute and say, okay, if price purges down into here and we get this recovery, so we'd want to see a low swept to generate liquidity. We want to see the high that swept the low, yeah, closed above, and then we can look for a fair value gap in here to be a buyer, right? Or you could use something like a breaker candle, for example. So that's certainly how I'd be looking at ETH BTC. Let's just take a little quick look at the questions as well. Hey, Nit, how you doing, brother? Yeah, so Telvin's got a good point here as well, right? I'm thinking there's still the halving upcoming. Market does seem super greedy, though. Yeah, I think they're really good points. I think there's something, if you're looking at like the fear and greed index and stuff like that as well, you typically want to be a buyer in fear, right? You want to be a seller in greed. The only problem is, as we all, as most of us will certainly know, and anybody that's had more than a few years exposure to this market, and especially anybody that's been through bull markets before, is these things can just take off, right? I'm not saying ape into stuff. I really don't believe in that. Really what we want to be doing is utilizing it and then looking at, okay, where are the key areas to buy, not trying to FOMO in and have that feeling that you've missed out. There's always opportunities. There's always certain coins. There's always narratives that are going to run. So if you feel like you've missed the boat, don't, because you'll miss most of your upside. Right, some of these assets that are really, really, really ripped, you're going to miss out, right? And then you're going to expose yourself to unnecessary risk. It's just a silly, silly thing to do, right? And I know it's difficult because we're all emotional creatures, right? But just, find either, if you haven't got the fundamental knowledge yourself or the knowledge about the projects, find some really, really good fundamental analysts that do. And I'm absolutely going to shill Milky Gem Hunter, who I'm lucky enough to work alongside at the Bird Nest. He's fantastic. Actually, QBS always finds some really, really good stuff as well, QBS Graphics. But someone I have no association with other than just kind of like a bit of an internet friendship, but I think is an absolutely top guy and serious account is Crypto Kazi. as well. And I know him, my boy Trader Dank, and Shads have got together, and they've got this amazing new live stream that they're doing. So make sure to go and check that out. Come and tag me on Twitter later, and I'll give you the details. But they're absolutely ripping it. Awesome, Niz. So what's your plan on here then, Niz? You're looking at holding until 53k, then the alt season that follows, dump it to mid-30s. I am utterly on board with that. So let me just show you this in terms of an idea, right? So let me overlay our weekly levels. And then just before we go on, and we will look at some of these other alts, I just want to kind of touch upon what Niz has said there, because I really buy into that myself as well, right? So what Niz is saying is looking at this thing ripping up until around about, kind of 53, right? So yeah, holding to about 53k, we see a consolidation. And let me show you why I'm kind of looking at a similar thing here. So this is the fair value gap here, right? This is capping the market from this point. Price interacted with it here, sold off. It hasn't got back above it since. So all these levels that we can see here are very, very similar kind of areas. We've got our areas of mitigation. We had this fair value gap. And look what happened on a weekly scale. Price pumped up into this, and look how we kind of got stuck here consolidating. We closed above it here, yeah, making this an inverse fair value gap, right? So we then turn that to purple, meaning we're looking at this holding as support. And then all of a sudden, price rips higher. Yeah. Now, what we've got here is a balanced price range. This is a bullish fair value gap closed below with a bearish fair value gap. And again, we can see that price kind of held in here. Now, I said to everyone previously that, a close above this is just super bullish. And we've got this pre-made liquidity level here at 48,185. And we didn't quite get there, did we? What did we get to? 48,083, right? So we're about $100 short. But this is what we're looking for, right? You see these areas consolidate and hold. And what happened in these key areas when price was consolidating, right, was the alts absolutely ripped, right? And this is what Niz is talking about here, right? And I think it's just a really, really good point, because what you tend to get is this is when you get these alt seasons and price just absolutely goes crazy. And I think we're probably looking at fairly similar kind of areas here, because we've got this fair value gap here, this key inefficiency in the market, right? Now, I just drawn it in with lines just to make this look a little bit more, just a little bit cleaner, but this was never retested, right? So I think when we're looking at this, we could easily see, I'm not saying we go right down there now, but I do think that we get something like this. I think that's very much on the cards. Not immediately. I think price is going to get up to here, first of all. And I think price is going to find, and it's going to consolidate around here. When this happens, I think we're going to see some craziness in alts. I think the things are just going to absolutely rip. But then I do think it makes sense for price to have a purge, have a bit of a reset. Like someone mentioned earlier, I think it was actually Telvin that said, look, it's kind of, it's the greed that's in the market, right? So retail typically, and I include myself in that, and I'm talking, when we're not talking non-retail, we're talking about huge commercial entities, right? Hedge funds, institutional buyers. They're not going to be wanting to buy up here, because ultimately the upside is here, right? For them, what are they going to do? Buying up here when the downside's here, they're going to want the market a lot lower. These are the people that have been accumulating a lot down here, flushing out the market, resetting the leverage, holding lots and buying lots and lots of spot, and then watching this thing as it rips up. We start getting into territory up here when retail starts to flood into the market, then you start getting into slightly dangerous territory. Right, what time did I start waffling on about this? I need to make a note for QBS or he's going to shout at me. Let's say, should we make it up, shall we? Let's say 18 minutes. There we go. Perfect. So does that make sense to everyone? Just looking at that as a little higher. So yeah, so I'm sorry, mate. I'm going to absolutely murder your name here. Dahilon or Dylan, maybe a different spelling of that. But yeah, so altcoins, my friend, are let me show you. So you have BTC and ETH, which are really your kind of leaders. Ignore these because these are your indices and these are Forex. But anything like this, Link, AVAX, ANKR, take your absolute pick, Atom, AVAX, all the way through this beautiful and endless list of different tokenized projects that come into the market. All right. So they're the areas that you would look at. And typically with ones like that is very similar to like we were looking at the ETH BTC chart, is when they're down there and you're watching these big periods of consolidation, as we saw here, right? We've seen exactly the same thing. And you'll see some really, really good chartists, people like Burb and stuff like that, and they do this so well. Axel Kaibar as well, who's just absolutely exceptional when it comes to trading patterns. Look, price is just getting rejected here, right? So what you've got is you've got this downtrend. Now, what happens is you kind of break out of this and then you don't really get much conviction. However, the well-versed among us will notice that when you shift structure, which we get here, right? So we've broken out of this downtrend here, but we haven't broken structure yet, but we do here. We shift structure here. Why? Because that's a high, a lower high, lower low. Yeah, so lower high, lower low, lower high, lower low, lower high, lower low, and so on. Until here, this is our market structure shift, right? Because here, we've set a higher high. Now, when we come down into this area and hold this level, you'll notice that basically we've done a few different things here. We've flipped these up close candles here are suppressing the market. All of a sudden, these up close candles here suppressing the market get closed above. Now the down close candles, the dark candles here, the bearish candles, are now supporting price action as we move higher. And ultimately, we're just in this really, really big uptrend at the moment, which is super, super bullish. There's a few different ways that you can kind of utilize this. You can use moving averages and stuff like that, but typically market structure won't lead you far wrong, okay? So let's just take a look at some questions. Julian, hello, mate. Great to have you on there. Kelly Kellum, how you doing, mate? Still want to have you as a guest on the BitLab stream. We'll ping you an extra schedule. Yeah, absolutely, bud. Would absolutely love to come on. Fantastic. Yeah, definitely hit me up and we shall connect. Who else? Trader Mum Joe. Let's have a look. What we got here? Yeah, see you later, Niz. You go and absolutely smash it, brother. Make sure you give Niz a follow, guys. Really, really good guy in the space. Exactly the kind of guy you want to look. Waffle away. Yes, sorry, mate. I do talk a lot of shit, don't I? Pardon my French. Trader Mum Joe. So BC, would it be correct to say then inverse fair value gap either becomes support or resistance when it closes above it, depending on direction of the market? Yeah, that's exactly what it is. So if we look at the chart that we've got here, Joe, then and let's just focus on this one here, yeah, this middle one. So let's see what happens when price comes up. Now, when price is interacting here, right, we're only looking to short this or to step out of the market and wait for it to consolidate, depending if we're day trading it, swing trading it, or looking to position trade, right? When we close above it, and it is a very skinny close, yeah, but this one here closes above. Then we get a secondary close here. Then it's go time, right? Because then we're saying to ourselves, okay, we're going to be moving higher from here. The other thing I really want to kind of impress on people, stress, I don't think either of them are correct, actually. But something I would like to show people that I've always found incredibly useful is what ICT teaches as a change in state of delivery. So just to kind of go over that again, Trader Mum Joe, sorry, because I don't want to cut you short, but absolutely, if you close above these, it's a sign of strength. In fact, let me just get a clean chart up for a second and show you something really interesting. There's a really good trader called Ryan who does a lot of ICT stuff, and he basically works out almost his entire bias based on a 4-hour chart. Now, he does this a lot more with Forex and indices, right? And Bitcoin can be a bit more volatile, so it's not as clean. Let me just get rid of the session breaks quickly and show you a little trick. If you're really struggling with bias, I do this on an hourly, right? Ryan is someone that does it on this, and ICT as well. I've seen a few others too. But basically looking at FVGs, right? So 4-hour fair value gaps, or actually, let me show you on the hourly because it's all fractal. It just depends the time frame, right, that you're looking to trade this on. But if we want to be more aggressive with our time frame, then simply looking for here is we're gaining our bias based on our fair value gaps, right? So let's just draw a few in at a random spot here. So what happens here? What happens here is price is being suppressed by a few different things. When we're in a downtrend, as we are here, then it's our up close candles that keep price lower. Yeah, so up close candle, we close below it, change in state of delivery, meaning that we've closed below a bullish candle, yeah, with a bearish candle. If they're consecutive, then you need to close below all of them, right? So the whole lot. In this case, we've got a single one. So what do? When we close below this, that becomes an area of mitigation when we close above it here. Why? Because this is offering resistance. Close above it, turns to support, moves higher. It's exactly the same as we look at with our fair value gaps. Price draws down, comes back up. When we inverse this fair value gap, so from this candle, we're then bullish, right? Because remember our theory, if price has taken external liquidity, taken this low, our expectation is for price to head to internal liquidity, okay? We violate internal liquidity, as we do here, then price is basically telling us it wants to move higher. So then we're looking for the next swing higher, which is here. And then what did we say? External liquidity is taken here. So now our expectation is that we're going to move to internal liquidity, right? Which is in the form of this fair value gap. Then what happens? Price comes up, takes external liquidity here. So then our expectation is for price to come down for internal liquidity, right? Ultimately, we don't make that here. Price just doesn't come down and retest this because the bullish momentum is just too strong. So what do we look for? We look for our change in state of delivery, right? Do we get one here? We don't, because we don't close above it. My change in state of delivery lines are blue. So we see we don't close above that here, but then we form another bullish candle, right? We close above it here. And yes, it is a strong close, but although you've missed this move, you still get all of this, right? So if you're struggling with bias, you can learn so much from the fair value gaps, right? A bullish fair value gap should be supporting price, right? So we see here, support, support, support. However, we always want to take a nod to recency, which will be making Erica chuckle, because I said that, I say that a lot, and it's very much part of my strategy. However, it was brilliant because I was interviewing a really, really big account on, I think it was Congress this year, actually. One of the first things they turned around and said was recency is absolute nonsense. But in fairness, for their particular trading style, it might be. But for me, on the lower time frames, it can tell me a lot. So if we're in a downtrend here, which we are expecting the bearish fair value gaps to reject price, yeah, and the bullish fair value gaps to support price. So when we change that, right, as we've seen down here, and in fact, we just sweep to a random point on the chart, which we're going to do here. Let's look at how that plays out. So we'll start here. Bearish fair value gap. So when price, and I trade within kill zones, right? So when New York opens here, if we were below this, I'd be looking for shorts. However, we can see that we've closed above it. So I'm only looking for long setups, right? Simple as that. Then I'm looking in here for where's the key point, right? Look, as we're moving along here, price rejects. So while we're in this area, within a kill zone, like here, we're looking for short setups. We're then looking for lows, highs, or fair value gaps. So price retraces to here. So now we're looking for long setups. We're back in here. Short setups. Why? Because we're delivering from a bearish fair value gap, right? Now, when we close above this for the first time, which is here, you can see how this becomes an inverse fair value gap, and it's showing that the market is now delivering strength. So therefore, we move into a buy program, meaning that we expect the bullish fair value gaps to be respected along with the order blocks, right? Change in state of delivery up here, pushes higher. Change in state of delivery, pushes higher. So does that make sense? Let me just have a quick look at, we've got a few on here. Hey, Moral, Happy New Year, mate. I am doing well. How you doing, my friend? Hope you and the fam are all very well. Jono, hello. Do you think BTC and BTC EFT must on one line? Sorry, mate. I don't quite get what you mean. Do you think the BTC and the BTC ETF must on one line? Sorry, mate, I don't want to misinform you. Could you just let me know that in another way? So brain's probably just not on top form at the moment. Lots of windy walks on the beach. Xana, hey. What a beautiful kiddo. Yeah, recency in BC. Yeah, I love how he absolutely just ripped my theory apart on that one. But it goes to show you that we've all got... No, Jono, sorry, mate. I don't mean to say that at all. It's not. My English isn't amazing, and I'm not smart enough like you and many other people to speak another language. I just want to make sure that I don't misinform you, mate. So does everybody kind of get that theory, right? That how we're looking at our fair value gaps, how we're looking at liquidity when we get these purges, right? Now, I know Erica asked for an alt further up, so let me just find that again. NXRA. I don't even know where you find some of these things, Erica, but I'm always learning from you as well. Just quickly though, on BTC, on an hourly scale, the reason that I was bearish this morning for the London session wasn't because I think, as so many people tell me, that this thing's going to zero and I'm an idiot. I'm trading this based on liquidity, right, guys? So I'm not talking about this being a high time frame theory of thinking this is going down, but I'm bearish this morning purely on the basis that as we stepped into our London session, we got a change in state of delivery, right? So I'll just highlight that again. What is that? That's when we have, in this case, consecutive bullish candles, yeah? Here, closed below by a bearish candle, meaning that after that close, I'm looking for short setups here. How do I trigger those setups? I move to a 5-minute chart, and then I need to find confluence. So I can only take trades after my red arrow. So what do I want to see if I'm bearish? I want to see two things, right? I want to see price delivering from a bearish fair value gap, and I also want to see price respecting the order blocks. Also, a change in state of delivery. The black line represents these up close candles as the order block, right? Then what I'm doing is I'm then moving to a 1-minute chart. And see after the line here? So what do I need to see? I want to see the same thing again, but this time I want to see a sweep of a high. See the local high is swept here. Why is that important? Because it shows me that stops have been engaged on the opposite side, right? Then you can do different types of setups. You can use inverse fair value gaps, which is one of my favorite, but I appreciate that can be a little bit complex. So one of the things you can focus on are looking for shifts in structure, okay? So this is our market structure shift, which we'll label up MSS. All right, and then within that market structure shift, we want to see displacement. We want to see it closed below. You want to see a nice strong candle, right? And you also want to see a fair value gap within here. Now, what we can do is you can do a few different things, but you can take your premium discount, for example. And remember, we want to be shorters from up here. So what would make us short from here? Well, our breaker block. Yeah. So what's a breaker? Let me just do that in orange because they're orange on my chart. Right? We're going to get rid of premium discount. The reason I put that on there is because I could have shorted from this fair value gap, which would have been fine, but it would have given me a much worse risk to reward, right? Because if I'd shorted it from here, the start of that FVG, I've got to have my stop loss above the swing high, which is here. And then really, I'm looking for the key liquidity of the day, right? The low of day here is only there, and look, that's only 0.8 risk to reward. However, because I've identified the breaker, now this is the down close candle before the sweep of liquidity, yeah? Meaning that when we return here, which we do here, that's where I want to be a seller. Now, all of a sudden, I've got a risk to reward of 1.52. That's starting to look a little bit tastier, but ultimately, I can then use my standard deviations. So I want to do that on the manipulation leg, which is this leg moving higher. And then I'm targeting 2.5 typically. I would move my stops to entry when I get to I get to the low of day, which is here, because price could reverse there, right? If it does, like it would have done here, let's have a look. So in this instance, price gets to here, right? Doesn't come back to take our stops. We can then extend this down to 2.5. We're holding here. What do we want to see? As long as price is respecting our fair value gaps, right? As we're moving lower, see, we're not closing above these. We're not inversing these, right? We can literally just hold this. Then we want to hold it down to 4. When can we then close our position out? Well, quite simply, we either want to see a key change in state of delivery, or we can look for when we then start building bullish structure, right? So here we shift structure. So then what we're looking for is we're then saying, okay, the price is going up, at what point higher highs, higher lows, yeah? Are we then starting to respect the down close candles as order blocks? Yes, we are. right? So we can either trim some position here or we can close out of our position entirely, all right? So that's why when I'm talking about being bearish, it's very much about context, right? As a day trader, my intraday bias is going to be very, very different from my high time frame bias, all right? Ah, Jono, that's very clear, mate. So try to explain, when BTC ETF comes, must it be the same price as BTC? Yeah, so the ETF approval, it will be the same in terms of the price, my friend, give or take, the same way that different exchanges have different prices, but it will be in and around the ballpark. The key thing in terms of how it's affecting, how it will affect the market is the fact that it's going to be very, very bullish. Now, that doesn't mean that the market's going to react like that, however, because we've had a really, really big run up into it. As we were talking about earlier, there is that whole idea of buy the rumor, sell the news. Yeah. Yeah, exactly, Telvin. Exactly right. Yeah, so it will, obviously they should be in and around the same kind of price, right? But the key thing that we're looking out for is how it impacts the market, because it should be very, very bullish. However, as we were kind of nodding to before, these kind of situations tend to look to punish over leveraged traders that enter the market late. Yeah. So people that might be looking to buy now and they're slapping on 20, 50, 100x leverage, then, they tend to get wiped out. So with anything like this, spot exposure is normally kind of like your safest approach. So Joe, what we got? It's starting to make sense, BC. I get confused when you have bearish and bullish inverse fair value gaps all around each other, but learning from you daily. No, you're very welcome. What I would say is you want to kind of focus on your higher time frames, right? Obviously, if you start getting down onto the real low time frames like we've done here, you can really start to get chopped up, right? And then, like we were saying before, you're going to see a lot of these, like a lot of them on the chart, right? But also, it's all about kind of putting context in with it as well. Yeah, if you start to narrow it down to within your trading sessions, and looking for the reactions in there. So, for example, if we take a look at yesterday, right? Now, yesterday, as we step in here, right? So if we focus on our New York PM session, which are these three blue dots here. Now, when price opens within here, what am I looking for? I'm looking for a high to be run, yeah, or a low to be run, or from price to be delivering from a fair value gap. So if I mark the start of the session here, and where are we, right? What has price done in here at the moment? Has it done anything significant on an hourly scale? Has it taken a high? Has it swept a low? Is it delivering from a bullish or a bearish fair value gap? No, right? So we have to be patient. However, look what happens here right at the end of the New York session. This is what I'm talking about in terms of leverage getting wiped out, right? This high, wiped. This low, wiped. See this big candle here? Took out the highs because people are over leveraged there, took out the lows because people are leveraged there. And now price just kind of starts to chop around and range. All right. If we were actually looking at this as a range, so we've taken the high, taken the low, then at the moment we're asking ourselves, is this a deviation? As SC would say, if we step back into the range here, you want to see some structure built, and then you would look to trade this to the high of the range. Okay. So let me just take a quick look at that coin again, Erica, because I've slipped off again into a random little rant. Where was it? So NXRA. Okay, give us a chance to do a quick top down on that. NXRA. Let's have a look on KuCoin, shall we? So this is a cheeky little spot asset that Erica has picked out for us. Oh, and obviously we've spoken about this one before as well. So we did get that really nice SR flip here, obviously. Look at that. So these real kind of key highs. We get that close above it here, and then look at all the downside wicks going into it. At the moment, we can see this was a real kind of nasty move. Prices have come out, obviously probably got a lot of late people interested in this that have, again, over leveraged coming up. And then that's just offered too much of a tempting carrot to big accounts to fill that in the other way. Purged it right back down, and now we're kind of in this area of consolidation. We're looking at this on the daily. I would say if we're looking to get bullish on this now, what would we want to see? So we've got if we can get above this, get ourselves a change in state of delivery on a daily scale, I think that would be our kind of first bit of bullish intent here. As it stands, we've swept this low. And look, we've not managed to displace below it, meaning that we've not managed to have any kind of close below. So price has done that. We've had a little bit of a bullish reaction. We don't, unfortunately, have any fair value gaps in here. But I tell you what we do have is we have this inverse FVG. See when price again closed below this here? Right, that should have been offering support. We would have got some longs out of it here. Then when we close below, we look for price to run liquidity lower down. Okay, so let's take a look at this on our 4 hour. So this here is a key order block, a high probability order block. Why is it a high probability order block? Because it has swept liquidity, into a support level, and we've had this bullish reaction above it. Now, when price revisits this, we expect a bullish reaction higher, okay? What we'll notice here is that we haven't had that change in state of delivery on the 4 hour either, right? So let me just get rid of that for a second to clean that up. See these down closed candles, not closed above. This down closed candle here, also not closed above. However, if we do get a close above this on the 4 hour, bullish close above this, I'd really like this running at least kind of on an interim basis up to these highs here, which is at about 0.144945. That's what I'd be looking for there, because we're holding this high probability order block at the moment, meaning that we want to see a bullish reaction from here. We could then move down to a lower time frame and target something like a 15-minute. Now, bearing in mind, I'm talking about if we get the close above here on the 4 hour, not on a lower time frame, has to be on the current time frame. Seeing something like this would be awesome. Okay, so again, it's this pattern. We want to see a low set. We want to see that low swept. We want to see this level held. We then want to see an impulse move higher, closing above this higher. And then we can look for a little retrace to be a buyer and ultimately trade this thing higher up. I'd be kind of taking an interim target here as well, over here on the left. Let me just have a look at some of the most recent coins. Sorry, guys, just flicking between the two screens at the moment. That sounds very smart to me, Telvin, not to do leverage. Can I go through ETH the same way? Yeah, of course, Shabs. No problemo. That was a good move to take profit. It was, yeah. Jono, BTC broke 45K. Okay, well, let's take a very quick look at that. And then we're going to flick over to ETH. And then I'm going to show you, we're going to finish up with sort of 10 minutes on this daily liquidity. So, let's really focus on our lower time frames here, guys. All right, let's take a look at our 4 hour. So what are we looking for? And what were we literally just talking about here? So we can look at this in terms of our inverse fair value gaps, right? But ultimately, again, we had our change in state of delivery here, right? On a 4 hour, the up close candle, this closed below. We should be expecting this to flush lower, okay? Now, we don't know how low this is going to go, but what we do know is at the moment, I'm going to be cautious for the next 3 hours and 10 minutes because we still haven't closed below this, right? Because for all we know, price could recover back into here and then start moving higher. Okay, so the move is a little bit late. The short move was yesterday, right? Why? Because we've got this fair value gap here drawing price lower. We had the change in state of delivery here, meaning that this is when we'd look to trade this lower. Okay, the move actually took place in Asia, right? So in terms of downside targets, if we do close below this, well, we want to be cautious of this low, first of all. Something we could absolutely see here is price run this, come back into here, failing to close below it, and then move higher. Are we going to get that? I don't know, right? I just don't know. I'm going to monitor these areas to see and wait for those signatures in price to give me an indication. But if we're not going to have a reaction there, then this will be my next target here, because we've got no fair value gaps in here, right? So if price comes down, closes below this, I think we purge this lower. So that's why I'm saying at the moment, I'm looking to trade this, just to day trade it, right? I think there's a lot of news out at the moment. Prices run very hot. It's one of those things we want to see kind of Bitcoin consolidate, and then we can have a real run at the altcoins. All right. So somebody, I definitely can't pronounce that name. Unfortunately, it's such a beautiful language, but it's you know, most European languages are sadly beyond me because I'm a simple English creature. But it's I'm not sure, mate. I don't make predictions like that. I think it's entirely possible that, and even further, it could go even further, right? But the problem with making predictions like that is that, you know, people always seem to remember that. I remember Burb coming under a lot of fire, just helped so many thousands, tens of thousands of people had make life-changing money. And then, like a lot of people were making predictions about how high Bitcoin would go in the previous bull run, people forget very quickly all the good information, and then all of a sudden focus on the facts and call people idiots for making predictions. Who was that really famous trader as well who had that model that was just exceptional during the bull runs, and then that model broke and everyone kind of got on their back? I think, look, the best thing to do if you really want to kind of pick targets, is really zoom out, focus on where your liquidity is resting on the higher time frames. When you get into price discovery, meaning that you break all-time highs, then, you know, basically it's very, very difficult to predict where it's going to go. So what we do is we then move down and we rely on our technical analysis to say, okay, are we holding bullish fair value gaps? Are we holding bullish order blocks, etc.? If we are, then we keep with our bullish momentum. So like this on the 4 hour with ETH, and I know someone just asked me to just take a look at ETH. Sorry, Shabs, wasn't it? Yeah, certainly. So just looking at this quickly here, let me tidy some of this up. But this is all using the same principles that I was just telling you about, guys. Just for full disclosure, you can see all of my positions. All of these, right? Longs, shorts into the market, right? All based on change of state of delivery, low time frame plays that we were just discussing. All right, I always keep them written on there because I like going back through all my notes and really kind of being critical of decisions that I've made. But before I digress, let's hide all of this and just do a very quick top down, right? Let's start on our daily. What's ETH currently doing on the daily? Where does our liquidity rest? We've got liquidity resting here, which we haven't quite tagged. We've got liquidity resting above here, okay? It makes sense. It would have made sense for me that we'd run those. That would have been my thinking on that. Just purely because you very rarely do you see price kind of just stop before a liquidity target before coming back to take it. But we did get that here, right? Price came back up into here, showed weakness, but once again, you know, we inverse this FEG, ultimately purged out these lows. If I'm looking for downside targets on the daily, then I'm looking there. If I zoom out, is there anything more really there that I can glean from this? Not really. So what I'm going to do is I'm going to go, okay, let's see what the 4 hour tells us. Now the 4 hour has to be bullish here for me. Higher highs, higher lows, and we're currently delivering from a bullish FVG. So that's our fair value gap, hour 4, right? So while we're doing that, I'd only be looking for long setups here if I'm using that as my higher time frame. If I am using that as my higher time frame, then I'm moving to a 15-minute chart. I want to wait for my New York session to start. And what I'd be looking for in here, I like this, for example. Price had a really big reaction at this low. So what I'd want to see here for any kind of bullish continuation, bearing in mind we're in a bullish fair value gap, is I would really love to see price kind of do something like this. And then really make a run on these highs. Now, if I then zoom back to our 4 hour, what's going to make me change that conviction? Well, quite simply, if price comes down and closes below here, then my first expectation is for this low to be attacked, and then ultimately this low here. And again, what we would do is we would go to a lower time frame here. We would get our close below, which we would get here. Then we'd probably be looking towards like the New York PM session at this point. Again, you don't have to use kill zones. It's just, you know, what I favor using. But once we get that close, we'd want to see something like this. A run on a high, yeah. Generate that liquidity. And then we would look for something like that. All All right. The reason that I like to see the highs run, like with this one here, is because it shows us that the stops are being engaged on the opposite side. That's trapping people the wrong side, generating liquidity. Ideally, we would have a fair value gap in here from that move, and then we can look for a secondary fair value gap in here, and this is where we'd look to be sellers, right? Price above there, target 1, target 2. Okay, so I'm not trying to enforce my will on the market. While we're delivering from a bullish fair value gap, I'm looking for long setups. When we violate those, I'm then switching my bias. I'm looking for confirmation on the lower time frames to move towards short setups. All right, hopefully that makes sense, guys. Yeah, you know what? Let's take a real quick look at that. But then I am going to extend this stream by about 10-15 minutes, guys. I know it's a pain in the backside because it's very long for you lot. But I really do want to show you these kind of daily liquidity runs that you can trade, all right? Because in times when you're uncertain like this, you're very welcome, Shabs. So let's take a quick look at NIR for NIT, and then we are going to finish that on STX, and then I'm going to show you this liquidity. Apologies if this overruns for anyone, like poor old Craigie boy is probably well back at work by now. NIR, where's my perpetual? Here we go. Sorry, let me just get that right again, otherwise it tweaks my OCD. Right, so let's rip it again, shall we? Daily. When did we last look at this? Oh, back in October. But again, guys, look at what we were looking for here. Price, we can see the arrow on here, driving down, holding our bullish fair value gap, and just look at that. I really should have traded this, actually. Just it wasn't, unfortunately, on my horizon, which is silly now, but you know, it is what it is. So daily scale, if daily is your high time frame, what are we doing? We're holding this fair value gap. Why is this important? Because look, support, close below this here, yeah, on the daily, and we take a run at this low, and this I really like. I love this for a reversal. Why? Because it's a low sat with inside a fair value gap. ICT would call this, or it is, he's coined it, it is an ITL, which is an intermediate term low, meaning that we shouldn't see price close below this. These lows often provide exceptional liquidity pools where you can see reversals in price. Doesn't mean that that's going to happen, but what it does mean ultimately is price is purging down into here, taking out this low. We'd be looking for long setups in here. Once again, on the daily scale, if we're looking to position ourselves, if we get a close below, then we're looking for external liquidity in the form of this low. Okay, so let me just tidy this little bit up here, and then let's move to our 4 hour. Again, we can see beautifully clean. We have this, right, which is a balanced price range. It's certainly an inverse fair value gap. It should have been offering support here, which it did, right? We shouldn't forget that. So price offered support here, then it came back up. It ultimately failed in here, closed below. So look at how we can, let me just get rid of the daily for a second, right? Look at how we can add the confluence together. Here we get the close below, right? Now, what are we looking for? That's showing us bearish intent. Well, where's the next possible place that price could be reaching for liquidity? This low, because that's where the stops are resting, right? Now, remember what we talked about before. Price has now swept external liquidity in the form of this low. It's now drawing back the internal liquidity, which is this fair value gap. Price is now delivering from this fair value gap. So in our London session this morning, on the lower time frames, we would only be looking for short setups, right? So what did London give us? London gave us a beautiful sweep of a high, both this high and a local high. Did we get a break in structure? Well, we get this low. It was a, oh no, it did. I thought it was going to be a bit of a dick then and stitch me up, right? Obviously, these things are never guaranteed to work. They'll never work every time, right? It's all about building these things up over time. But we can see the cleanest setup we actually got on this short was over here. Yeah, but we did, I think, get one here as well. So let me show you. Now, remember what I said. We want to see displacement below this low, meaning we want to see a close. And this is a really good one because this is like a pin bar candle, right, with a really big body and a small nose. Yeah, that's showing bearish intent. It's showing sell pressure. Look at the upside wicks here. See the downside wick showing absorption? Then price flips around here. We get the close below. So then remember, what are we looking for? Yeah, do we get it? Oh, we don't actually. There's no FVG there. I thought we kind of came back into this fair value gap. So we missed it marginally because, or I would have done because it's outside of my trading session, right? But if you were looking at this and you're not constricted by kill zones, then this would have been your trade here, right? You would have been seeing the breakdown, leaving this fair value gap. That's where your short trigger would go. Your stops would go above the price swing higher. And your first kind of target would be these lows down here. All right, that's what I'd be looking at on near. So I hope that's been, I can't get them all exactly. Not yet, waiting to hear about the daily. Oh shit, sorry, man. Let's rip onto that now, shall we? And then, Nick, we're going to take a look. Sorry, Jono, near was for you, wasn't it, mate? We'll go on to STX. Remind me at the end, Nick, please. And let's just run onto that daily liquidity, right, for our boy Craigie boy before he needs to shoot back, if you've got enough time. If not, I know you'll hopefully you will have some time afterwards. So let's do this looking at let's look at Bitcoin, shall we? Bitcoin's obviously really ripping down at the moment. You can see kind of social media people are going a little bit nuts. Don't worry about these things, guys. Just always bring it into context, right? So what I'm going to use for this is I'm going to use this free indicator that you can get on TradingView, which is by this. I have no association. I've never met him, but I would love to because it's a fantastic indicator that I can't speak highly enough of. Kill Zones by Josh, Josh, UUU. And this is just one of the most clean and beautiful session indicators that I've ever seen. And this is what I use, okay? You'll notice that for some of my strategies, I extend my kill zones by an hour because this is the one that Dr. Fuse made that I love. Brands it all up for me, gives me these session times at the bottom, my New York sessions here, London sessions, right? But I extend these by an hour for my change in state of delivery strategy, okay? But what I want to show you on here is how we can trade session liquidity, right? So I'm going to put the session breaks back on, which you can do by just going on your chart settings, events, and then session breaks. These vertical lines that we get down the page depict the midnight UTC, right? So these are our trading days. Now, let's just spin back to a random point, yeah, just to show that we're not using any kind of anything favorable. So we're going to start here. So we've got our London session, New York AM, New York PM, right? And all we're going to do is we are just going to make trades within our kill zones, right? And based on break of structure. Now you can see actually within crypto why I extend these by an hour, right? Because you can just see with these ones here, which are traditional ICT kill zones, you can sometimes miss these moves. But here are the very, very simple rules. This red box is Asia's range, all right? So Asia's higher, Asia's low. Now, when we sweep any of the session highs or low, we want to see a market structure shift, for example. With displacement, meaning we have that close above, and then we want to be buyers here, chasing this, yeah, to the next liquidity target. So the first example would be, say, this high. Yeah. So that's where we run Asia's low. Let me just do that in a different color. Does that make sense? So we run Asia's low. We take a sweep of a low. Remember our typical trigger pattern that we've been discussing. Where we come in, set a low, sweep that low, break the high that took the low, and then we look for price to move higher, yeah? So there was the sweep of the low. There's the high that swept the low. And what you can often do as well, and I used to use this as a strategy, I would call this the breaker line, and you can enter on that line. So this line here, right? So ultimately, we close above it here. When we get this close above, which is this candle, I open a limit order on here. My stop loss goes below the price swing low. That's my first target. At that point, I move my stop loss to entry, trim some profit, and then I chase targets higher up, all right? For which you can use standard deviations on the manipulation leg, for example. And if we're doing that, then we were chasing this up to our 4. And it doesn't really give us any reason to get out of the trade until, probably once we break this low over here. So just very quickly, I know I've ripped through that. You're very welcome, Jono. Does that make sense? I'm going to go through another couple of examples. Right, I know I went through that really, really quickly. And sorry, I've left that 100K comment on there for ages, haven't I? Oh, actually, I better make a note of this for QBS, actually, because I've basically bored that off the whole thing, haven't I? Since 18 minutes. Let's go. Session liquidity was from basically about 1 minute for 1 hour for, wasn't it? Perfect. So, thank you. Like these keywords versus... Yeah, so I do like extending them by an hour. Obviously, you have to do a lot of testing. The reason I've done this, I've got several years of testing across multi-assets classes, as well as multi-assets within each class. So, for example, like I don't extend these time zones for Forex, for example, but with crypto, I find that you do get these later runs. So does that make sense? Because we're now just going to go through a load of other examples really quickly. Yeah. So the same thing applies with New York, right? New York high. Yeah. So what do we want to do here? And if we're looking at the sessions that we've got, New York high, what do we get? Sweep. What do we then want to see? Break of structure. So again, if we were using that as our breaker line as such, which is just one of the most simple ways that you can do this. You can do retracements to fair value gaps. You can use breaker candles, lots of different those. I'll go over another kind of entry method system maybe on the next live stream, and I've got it on some of my previous streams as well. But remember, we close below it here. Limit order would go on there. We then have to put our stop loss above the prior swing high, which was in this case here. And we would just chase initially to this one, at which point we'd move our stop loss to entry. And then we'd keep kind of chasing these lower. Price, I think, would come back and stop us out. Or maybe, or might have just missed us here. But either way, we get ourselves a nice trade, right? So Asia's range here. So what do? We sweep Asia's range higher. In our London session, what do we want to see? Breakdown with displacement. I think one of these will be lower, probably the middle one. So we break down with displacement. This would have been a loss, right? Because the price ultimately then runs the high again. So what do? Run the high. Still within the trading session. Take out the low. Close below the low. High. Run to the low, right? So we took a 1R loss here, but we got a 2.67R win back here, okay? So yeah, this is what I would play around with, guys. And really, like, I really love Asia for this. Like I say, this was a very successful strategy for a lot of years for me, and really does cross over the different asset classes very well. I think this one maybe just sneaks us a little bit early. Where's our high here? Probably be this one, wouldn't it? So we'd want to see that one closed above, close above it here, or a few minutes early, right? We would have had a really long stop on that anyway. But if you use that indicator by Josh Yu, and obviously you can use these sessions as well, but just remember, really make sure that you're testing them, right? So what do we get here? Asia's high, swept here, but no break of structure. We sweep it again here. And what I like about this is we actually get an internal sweep here as well, showing that we're moving, generating that liquidity. Price comes in, closes below here on the last candle of the traditional session, but well within our extended session. Close below, back to the breaker line, above the price swing high, chase price down to the next low, 2.54R, stop loss to entry, price comes up and takes us out in the New York session. Yeah? So does that make sense, guys? Same as we get here. We sweep Asia's low down here. We'd be looking for a structure break over here, which we get. We don't, unfortunately, get the retrace to our breaker line. Oh. Which you can see here, price just runs too hot, which is fine. You wouldn't enter this, by the way, or I wouldn't enter this if we'd already taken the key liquidity target. So I wouldn't just keep that entry there to go long. Why? Because we've taken Asia's high at this point. So what do we have to do there? If we've taken Asia's high, then we want to be shorting it, right? Asia's high is taken out. What are we looking for? Structure shift. Close below. Here. Retrace to our breaker line. Stops above the price swing higher, which is actually kind of here, but you could be conservative and put it above that one as well. That's where I'd move my stops to entry at that swing low, right? Also, I'd be very, very conscious of where the low of day was, which is here. So from the daily open. But then obviously this would have been an absolute beaut, right? Because you would have had no reason to get out of that one until you were about, you probably exit here on the structure break, which is like 12R. Yeah. Does that make sense, guys? Does that make sense? Let's just read through some of the questions. Yeah, agreed. Some of the moves in Bitcoin have been outside traditional sessions. They have. I just extend the sessions by an hour. I found it's worked really, really well for me, but I just always recommend just, obviously make sure you test this. It does explain why the sessions are longer, Erica. You're right. It took me a long time to get there. I really don't like going against Michael, but it's not against him. Look, he provides the basics, the basis for the strategies that we build, right? And then the key thing is that you want to go out and you want to kind of find things that then speak to you and work with you. Yeah, again, obviously different kill zones don't work particularly well for certain people in terms of time zones and that as well. Atarnus, let's have a look. It'd be nice to see the strategy, how it plays in live session. Yeah, sure. So we do this with members, right? We started to do this. I kind of flaked away from it this week because I'm away and it works a lot better. I really do need my multi-screen setup here to execute on the different trade accounts and then to share the setups with the members, etc. But I'll start maybe trying to do a couple of times a month. I'll just do a free live stream with everyone and we'll just trade these live. Yeah. So just to give you an example, what we would typically do with that is I would look to trade the hourly CISD, right? So that's our change in state of delivery. So today, for example, we look at the beginning of our London session, which is here. Here's our change in state of delivery, right? So remember that's these bullish candles are closed below here. So after that close, when we step into the 8 a.m. candle in New York, this is where I'm looking for short setups. I then move to a 5-minute chart. I need price to be delivering from a bearish fair value gap, which it is here. I'll do that in red for you guys just so it stands out a little bit more to show us that we're bearish. Right? So when we interact in here, I then move down to a 1-minute chart and I'm looking for our tried and tested pattern. Yeah, exactly the same one that we've just been trading there. We can do a breaker line, right? Meaning that we're looking for price to engage a higher to show us that the stops have been taken. We're within our 5-minute fair value gap with a bearish high time frame bias. Then what we're looking for in here is for price to break down with displacement, which it does here, right? If we're using that as our breaker line, then ultimately it closes here, our entries here on this line. Stops have to go above the price swing high, so our risk to reward isn't particularly great here. However, we can see, and in this case, right, if you've already taken low of day, which we haven't, so we've got Asia's low would be our target here, the low of the box, which we've got a 1.82R, or we could use our standard deviations on the manipulation leg, which is here to here, and ultimately hold this out for our 4 standard deviations. All right, so I absolutely will run some of those as well. Yeah. Looks are though it's working live as BTC low just swept, waiting for confirmation, but was the chart you drew a while ago. Oh, awesome. Cool. Well, let's have a look, shall we? Because we're about 15 minutes away from the New York Open, right? So our change in state of delivery here, if we move in, and let me just get rid of that to clean it up. If we move into New York here, let me just check to see if that's a bullish or a bearish candle. It's so skinny. It's very, very hard to tell, actually. No, bearish candle is this one that I'm looking at here. So for our change in state of delivery here, moving into New York, we would need a close above this, right? So this would be the afternoon's trade, guys. For me, not suggesting you guys take it, just for me. I'm looking for the New York session to open. On a 5-minute scale, this is what I want to see, right? I want to see, sorry, first of all, on an hourly scale, I need to see price close above this. Obviously less wonky than that, but we'll leave that in there for the time being. Then on the 5-minute, looks even worse on that, doesn't it? Once we get that close above, and only after the hourly close above, what we're then looking for is for something like this. price to come back. We want to find a fair value gap for price to engage with. And all we're looking for in here is that 5-minute FVG, which will be bullish. So we'll do that in green. Then when we move to a 1-minute chart, when price retraces into here, we're then looking for this setup where we get a sweep. We get our breaker line. Long setup here. So once we close above, long setup, stops below the price swing low. And then we ultimately look for the highs of previous sessions. So London kill zone high would be our first one. And then we'd ultimately be aiming for Asia's high over here. So that's what I want to see there, if we're going to get that. But first of all, obviously, you know, we need to be doing this. The other way, quickly, guys, just before I finish up, that I would look at is if I'm trading this as I do, using my hourly, I'm asking myself where price is delivering from. So price is currently delivering from this bullish fair value gap, I believe. Or not quite. So I need to see this purge a little bit lower here. Right, because if we dipped into this, then again, I'd be looking on the 5-minute to see that shift in structure, right? So I would need to see, look how balanced this price delivery is. See how all the wicks are covering one another over? There's no fair value gaps, right? Say we had wicked into this and we did have a fair value gap here, a bearish one, and we'd got this close above it in our New York session, then I'd be looking for price to retrace to here, because we also have this bullish fair value gap, right? Which I'll do in green again, just to really highlight the fact that it's bullish for people that are maybe a bit new, although I imagine we've lost most of our viewers by now. And then again, on that 5-minute, I look for price to come into here. Zooming into this on a 1-minute, we once again look for our sweep. This is one of the ugliest ones I think I've ever drawn. In fact, I'm going to delete that and do that again. Low to be set, price to come up, sweep that low, close above the high, right? And that's what we'd be looking for there within that, but on a lower time frame. So look, guys, I really hope that's made sense. Hey, Zambuka. Yeah, no, I mean, I'm on holiday, aren't I? I'm probably, you know me, I probably am drinking too much in truth, but I've actually been really good the last few months. This is going to be such a big year, 2024. I've started training again. I'm back in the gym, picking my boxing back up and getting back into martial arts. I'm running more, I'm doing fitness boot camps. I've cut my alcohol intake down by like over 50%. I'm away having a little break now with family and the dogs, nice long beach walks, get myself in a really good headspace because the rest of this year is going to be animal. We're doing a lot of travel with TBN. We're speaking at a lot of conferences across the world. It's just going to be a great year, guys. It really is. And I hope you enjoy these streams. If there are any ways you think that I can make them better, I know probably make them shorter would be one, but hopefully they're good. I'm going to get QBS and his magic to cut some of these little bits into kind of snippet videos for you guys as well, which might be helpful. But do let me know. Yeah, I love this fact. We'll have to work late. Oh, Craig. Now I just feel awful, though. I'm always making Craig work late because he's such a legend. He hangs on to watch these streams and then has to get back to work straight afterwards. But yeah, I hope they're useful. Please do reach out if you've got any questions, guys. Do look in the description. There's loads of good offers going on over at the Bird Nest at the moment. You can come and get our trading team calls, which I think did like a ridiculous amount the whole year, actually profitable every single month. We had one break-even month in September, which was very choppy. So the algorithm that we had, which has been amazing throughout the rest of the year, kind of spalled and then got a little bit choppy. But apart from that, if you'd had a 10K account last month, you would have made about 3.5 grand, or 350 if you had $1,000 account, for example. The reason I'm telling you that is you can get our trading team calls for free if you sign up through either the Prime XBT link or the Bybit link. So that can help some people just earn a little bit of money on the side, which you can then invest in your education. All right. But I will always be on here as well for to do this a couple of times a week for you guys for free. So hi BC. Sicky Not, whose name I always, you're gonna have to tell me how to pronounce this, bud. Because it could be Sicky Noir. I don't know if it's kind of like, if it's got any kind of French connotation or anything on it as well. And obviously I can't pronounce anything because I'm English. But it's this one, my friend. So go on to indicators, type in kill zones, and you want the one by this very talented coder called Josh, U. Yeah. Josh, Josh. Yeah. So Joshuu. And the indicator is just simply called zones. I don't know why I accidentally hit the caps lock button there. It's not caps lock on there. It's just in lowercase. All right, guys. Joe, you're very welcome. Geo, you legend, very welcome as well. And everybody else. Atarnus, really, really good to have you on the stream. Welcome, my friend. Thank you for your time today. Trader Mum Joe, sick you not. Sampuka77, brilliant to have you back on, mate. Yeah, definitely more of a cold than hungover, I think, but it's all this fresh air. Craigie boy, Erica, Knit as well, great to see you on there. Lee, great to see you here as well. Really good information. Only been doing this 7 months. Awesome. All of these live streams that I do are available free on the Bird Nest YouTube, so you can go and get involved in that. Jono, thanks for your interaction today, mate. Really, really good questions. Obviously, Knit, you absolute legend. Shabs, it was great to see you on here as well. The wonderful Asian gentleman or lady that popped on with the name that is written in Asian, which is obviously miles beyond me. It was great to have you on as well. Telvin, good to see you on here, asking really good questions too. Julian, lovely to see you. Moral, lovely to see you as well, mate. Zana, the same. Niz, obviously, brilliant to have Niz on there. Make sure you're giving Niz a follow as well. Dilhon, Kelly Kellum as well. Yeah, absolutely. Let's sort that out and we'll get ourselves on a live stream together. Just brilliant. Alexander, I'm really sorry, mate. I know you asked for ING, SUI, and AVAX as well. Maybe reach out to me on Twitter and I'll send you over some charts. Tammy, lovely to see you on there as well. Stephen as well. Mr. Brownbug all the way from Hungary, which is a beautiful country. Joshua Walker. And I think that was it. Guys, just a real pleasure to be with you again. I'm going to keep the live streams going. I think I am on holiday next week, but I'm going to give it a rip as well. Do keep an eye on everything that's going on. Obviously, trade safely. If this has been of interest to you, please do click the likes. Let me know on Twitter and pop along and say hello at the Nest. You can get involved for free as well. And Whack, you legend. There he is. Gruffor, there he is. Shout out to me. Kees van der Bosch. There we go. You do get a shout out, my friend. MF as well. Thank you, everybody, for being a part of it today. This will be available for free on recording as well on YouTube pretty much immediately after this. So you can just do that by going to the Bird Nest YouTube channel and looking under live. All right, guys. Have a fantastic week ahead. Stay safe and do reach out if you've got any questions.